Hey everybody, Courtney Smith here with our Wall Street winners for January the 11th. Another good day for the good guys. Let's get going right now. Oh, wow, this is so fantastic. I'll just leave this here for an hour and a half so you can read it over and over and over again. Okay, the market took off. We got the setback that I told you I was looking for, and then we immediately started taking off again and made new all-time highs. The other thing is that we had a problem with the purple predictor. Notice the purple predictor from the beginning of December was very weak. Even though the price was making higher highs, the purple predictor was making lower highs. That divergence made me believe that the market was going to sell off. Well, it sold off. But now both the purple predictor and the price are moving higher together. So we've taken care of that problem. The Dow Jones, we saw a big increase in buying pressure. That's the little green line up there. And we also got rid of the RSI momentum divergence that we talked about last week. So all these things have become more bullish for the market. The NASDAQ took off to new highs. It was not in as bad a situation in many respects. The purple predictor was still bullish and so on and so forth. But still, nonetheless, it took off. Now, seasonality, well, we'll get to the seasonality, but we're on a buy signal right now. So we want to be taking extra large positions, 50% larger, 100% larger, something like that. You pick the number, but definitely bigger positions. Now, let's take a look here. I got to stop here, and we got to delve into this in a little bit more detail. One of the reasons I was saying we'd get a quick setback last week was because the seasonality of the red line and the purple line. The purple line is the first year of a Democratic president, and the red line is post-election after incumbent party loss. So those are the two that describe what's going on. But we only got a one-day setback? Now, if a market rallies when there's bearish news like this seasonality, that's very bullish. Now, if we took it all years, if we look at the green, the blue, the black, those really had no setback in January. So it's quite possible that the two preferred scenarios are not taking place this year. Now, it's still too early to tell, but we need to keep our spidey sense aware that it may be that we want to be looking at the black, blue, or green lines rather than the purple or red. I hope I explained that clearly. Okay, asset allocation. Look at what happened there. They just went over to the bond market and beat it like a tom-tom drum and took money out of it. They said, we don't want these crappy old bonds. Give me my money back. I got to buy me some stocks. The stock market risk indicator popped up. Look at that. This is a sharp change in sentiment. It's much more bullish now. The market's saying, no, let's take more risk, which means that they're very excited about the stock market. They're taking money out of the bond market. They're putting it in the sexy stocks rather than the boring stocks. This is a very big change in character in the stock market in just 1 week. Now, remember, you're here at Wall Street Winners because you want a unique perspective on the market. You don't want the same old boring stuff of everybody else. No, you want unique indicators that give you the true insights into what's really happening. Global shares outperforming U.S. shares and continuing to move higher. The yield curve popped up. Oh my God, we're almost to where we were in March after COVID hit. But listen, the higher the yield curve is, the more bullish it is for the stock market. So this is the first time we've had a really nice big up move since August, and it's even bigger than the one in August. So unless we set back, now notice back in June we popped up and then came right back down. I don't think that's going to happen. Fully paid up members will see why I think that's the case, but I think we're going to stay at a stronger yield curve movement. This is excellent price action here. I love this chart. Well, okay, I don't love it, but I like it. Bonds completely crapped out, collapsing down. Fully paid up members, you're happy about that. So there's a sharp change as well. Back in August, we had a sharp down move, and then it's just been a sloppy, choppy bear market. Since then, we finally accelerated on the downside. Look for bonds to go even lower. Bond key factors all saying we should see higher interest rates, and that's why we've been bearish for so long. The dollar, I told you last week we'd get a little rally here because of momentum divergence. Here's the rally. It might continue for another, we might see this pop up for another week or two. I think the market's kind of sitting here saying that once Biden is in, we're going to get a stimulus package. It's probably going to be trillions of dollars. We're going to probably see $2,000 checks go to everybody and their brother and their sister and their mother and their father or their uncle, and everybody's going to get $2,000 checks. That's going to stimulate the U.S. economy, and therefore the U.S. dollar becomes more attractive. I think that's what's going on here. Gold, plunge-o-rama. I showed you interest rates, the bond market. Guess what? That's why the gold market is diving. Higher interest rates, bearish for the gold market. And boy, it's showing it here. So I was getting bullish. I will tell you, I was getting bullish, and I actually bought a few more small positions in gold stocks. That was a mistake, as you can see here. Now, the ones that I bought are, I mean, they don't look as bad as this chart does, but because we had already made a bunch of money in them, but we're giving back a lot of it, and I'll probably get out pretty soon. So we got to get back on the sidelines in the gold market, that's for sure. Don't let the Johnny One notes scare you into buying gold. Please, don't let that happen. Our gold indicators, they were all bullish last week. Now we've got two creeping higher, but one is coming down. Fully paid up members, of course, will see why the market really collapsed, the real reason behind it. And if you're not a fully paid up member, what's wrong with you? I mean, really? Seriously? Okay, crude oil popped up. Same reason I think as the dollar popped up. Stimulus talk is we're going to definitely get a stimulus package now, and it's going to be trillions of dollars. I personally am going to probably get trillions of dollars from the Congress. You'll probably get trillions yourself. So they're going to start handing out money like crazy. Bitcoin is taking off as well, and as you know, we were bullish. I think I'm not long, but I think you should be long. I wouldn't buy it up here, though. I think it's way overextended. So if you're long, that's the right thing to do, but I can't get long up here. There's no place to control the risk that makes any sense at all. All right, freebies. Love having you here. Big changes this week. Focus on them. Follow what the markets are telling you, which I just told you what the markets are telling you. All right, freebies. See you next week.